what is the appetite when it seems like there's risk out there? We're not even quite sure what the risks are yet if you look at the economic data, and spreads are not particularly wide.
Great question. Thanks for having me, Vonnie. So we did see the biggest sell-off in credit in the last 2 weeks as we saw some of that volatility. A lot of that has recovered, but spreads are still sitting wider than the tightest levels that they were for several months. So in our view, there is still a bit of spread upside to capture over the next couple of weeks as we head into August. I think there's a few supportive factors. You mentioned supply. We still do have 20 billion to get through next week, but it's actually a lot less than earlier this month when it was 30, 40 billion per week in investment grade. And then secondly, positioning, investor positioning was very extended in the U.S., and that happened to come down with the sell-off in credit. So I think those two factors, along with some stability and growth, are going to be positive for credit.
Stephen, on that perceived investment risk in the corporate bond market, we're at something like 52 basis points. I mean, it's basically no risk whatsoever. Would you agree with that market assessment?
I think the market is pricing in both a economic soft landing to a glide path scenario with accommodation coming from the Fed that will be supportive of credit going forward despite the slowdown. And furthermore, and probably more importantly, the fundamentals of the credit backdrop is really fairly constructive going into this. And so when you take a combination of those factors, valuations are still tight despite the widening that's taken place. But we believe that the tight valuations are fair to both the credit outlook as well as the macro outlook, because we too do not believe that there will be a recession forthcoming in the future. And then for much of this year, the credit spreads have really traded an inverse relationship to where the Treasury component has been. And if you look at the price levels, that's been more steady. And in fact, credit has been a much more stable part of the market than Treasury markets for this year.